Is CCIV the next Tesla? Hey everyone, Simon Says Money here. Today we'll be talking about CCIV, what it is, what type of stock it is, and see where it's going to be headed. So CCIV falls under the Special Purpose Acquisition Company, which is known as SPAC stocks. SPACs are companies with no commercial operations that is formed strictly to raise capital through an initial public offering or an IPO. They've been around for quite a while and most recently has been very popular in the stock market world. We can see in 2020, as the beginnings of August, more than 50 SPACs have been formed in the US, which have raised some $21.5 billion. So basically, SPACs are companies that have no commercial value. They're trying to merge with another company and like a private company, work together with a deal and operate like that. There's also an article by The Motley Fool, Why SPAC IPOs Are Good for America and Good for Investors Too, posted on January 15, 2021. And we can see the first sentence, companies going public with the help of special purpose acquisition companies, those SPAC IPOs, was perhaps the hottest investing trend in 2020. And if we scroll down a little, we can see that the stock market did shrink. There was a record high of 8,090 stocks in 1996 before the dot-com boom, then 7,229 stocks in 1999. When the bubble popped, the number of publicly traded companies declined and kept on falling all through the 2008 financial crisis, and then fell more after. Companies improved from 2013 to 2018 as new companies resumed listing. And what it means to investors. Will all these companies be winners? No, they're pretty risky stocks or areas to be in. Most of the SPAC IPOs coming to market lately have been companies devoid of profit. So we all know Nikola was pretty hot a couple months ago. Ticker symbol NKLA. We could quickly see at the chart around the June. I remember each day it was going up 23, 32%. One day it was up 103% from one day, 103%, and I was closely following it. There was so many momentum day traders eyeing the stock, and then the highest was almost close to $100. Now it's at $19. These stocks can be a little risky, but the returns are huge. There was another article posted on January 16th, 2021, why I'd love to see Chamath Palihapitiya SPAC take Instacart public. Now most of you may know Instacart is a very popular grocery delivery. It was pretty hot in 2020. A lot of people lost their job and they decided to take on food deliveries. Instacart, a way to bring in income. Chamath is a very successful fintech billionaire investor, early investor of Virgin Galactic, Opendoor, Clover, SoFi, and managing his social capital holdings. Why Instacart makes sense as Palihapitiya's next target. Instacart has been a beneficial for society because of the pandemic, and there were delivery companies like Postmart, DoorDash, Uber Eats, and those companies are focused on getting food from the restaurant to the customer, while Instacart is getting actual deliveries. But there's no better time for Instacart. Through the pandemic, we have seen an upsurge of food deliveries, Instacart users. No one really wants to go to the grocery store due to what's going on in the world. So we order something online and can receive it on our doorstep within an hour or less. So here's some other SPAC companies. Here's the February 2021 SPAC calendar. I'm going to talk about two, the PCPL and SBE, and then get into the CCIV as the next Tesla. So SPAC stock has a target with which it will be intending to merge, even if it's a rumor or just a simple meme. SPAC stock will eventually go up wildly or sometimes down abruptly if it is a bad news. And these dates are from the internet. They can be postponed, they can be changed, so these are just rough dates. The earlier you know the potential merging, the offering of the company, the lower the price you can get into these SPAC stocks. And if they do go through, then the SPAC stocks will go wildly up. To buy a SPAC stock, there are 4 criteria that I will take into account. The first one is the team of the company. Is it composed of experienced investors, especially people who have done SPAC mergers? Are they wealthy investors? What is the team like, the leadership in that company? The second thing is the competition and timing. Who are the competitors in this domain? The electric vehicle space has been crazy hot in the stock market. If you're talking electric vehicle, what other competitors? Is it NIO, Tesla, etc.? Hot domains include healthcare, green energy, and LiDAR. The third thing I look at is the baseline. Penny stocks are really risky, so I would say a little above penny stocks, so over $10. If a company is really good, under $10, I'll consider it, but I would love to see that SPAC stock above $10 just to be safe. And the fourth one is your expectation of return. Is it 30%, 20%, 10%, 50%, or even 100%? What is your expectation? If you see a SPAC stock take off and you hit that target of 50%, 40% go up, then immediately go out, take your profit, don't be greedy, because we know that these could be very volatile. First, let's take a look at PCPL, Neuberger Principal Holdings. It will be intending to merge with E2 Open. Current share price is $11.54, so a little above $10. E2 Open is a cloud computing company, which is pretty hot today since everything is on the cloud. The new ticker will be ETWO. Kind of like other subscriptions with Google Photos, all the storage, there's a high subscription fee, and once people are happy with their cloud storage, they are usually lifetime or repeatable customers, so they'll keep using your service as long as it's good. On the stock chart, PCPL has been kind of uptrending the past couple days. We had a big spike up on Wednesday, December 23rd, and now it's trading at $11.54. So relatively new, trying to acquire a cloud computing company, E2 Open. The next stock, SBE, Switchback Energy Acquisition Corporation. Looking at the stock chart, been here since fall 2019 and started trending upward. Now it's a bit of a consolidation. Price is at $41.43. They're trying to get to ChargePoint. The ChargePoint is electric vehicle charging station. Now we know electric vehicles are pretty hot right now. We have NIO, Tesla, Lucid, CCIV. I believe that electric vehicles are the future, so companies that are starting to think in the long term will be more beneficial and trying to find solutions for the problems that may come up with electric vehicles. The number one most problematic about electric vehicles, not enough charge. So you can get a Tesla from California to all the way to the East Coast. You can find a charging station, but it's pretty hard to do so right now. But in a couple years, there's going to be many more electric vehicle charging stations, so that maybe one day you will never have to worry about your charge running out of your EVs. So that's what ChargePoint is doing. Great products and solutions for businesses, fleets, and drivers. Okay, so those other two SPAC companies on the calendar that I'll talk to. Now for CCIV, the topic everyone is here for. Based on the stock chart, it's been out since fall of last year, 2020. We had a huge update on January 11th, 2021, up 31%. You have 1, 2, 3, 4, 5 green days in a row for this stock. Up 31%. Volume is at 106 million. And then the next day, up 7.2%, up 18%, up 3%, up 5.76%. It is really overextended, I got to say. So it might consolidate, go down a little, but people might be taking profits pretty soon. From a low of less than $10, and now it's at $18. So almost doubling in a week. Doubling your money in a week. 100%. Well, here it was at high of $21, and here it was at the low of $10.02. And yeah, it was under $10 like 2 weeks ago. 3 weeks ago. So CCIV is a very hot stock. Everyone is talking about it. It's Churchill Capital Corp 4. We can see stock frost boiled after $600 check. Why SPAC Churchill Capital 4 stock is higher today. What to know about CCIV. And the rumor is CCIV is trying to acquire Lucid Motors. We have an article from investorplace.com. CCIV stock. What to know about Churchill Capital shares after trading halt. CCIV stock halted trading this afternoon following major Lucid Motors SPAC merger rumors. Now when you come up with the word SPAC, you know what that means. They're a company trying to acquire a private company. CCIV is rating higher on Friday, triggering a circuit breaker earlier this morning. Shares are once again up 9%. And taking a look at Lucid Motors, it's the luxury of electric vehicle. It looks super nice. We have here a max projected range, 517 miles, starting from $69,900. Max power 1080 horsepower. So very good looking car, very cool website too. And then there's also a tab saying design yours. There's an Air Dream Edition, Air Grand Touring, Air Touring, and most of these will be out later in 2021. Lucid Motors has been very hot, especially in California. Could be the next Tesla competitor. I'll end the video here. Thank you so much for watching this video. Don't forget to like and subscribe. Turn on that bell notification because I will post more stock analysis and finance videos on this channel. Let me know in the comments what you think about CCIV and Lucid. How are they going to react this next couple days and this trading week? I hope you guys learned about what SPAC stocks are. They're pretty hot and trending. And again, thank you so much for watching, and I'll see you guys in the next video.